Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Wednesday, July 24th, 2013. Well, a very large black body candle today, and a candle that has closed well down below the midpoint level, but below the midpoint level and the low, suggesting that sellers have found control at the close of trading today. And it's a moderate amount of control. The strongest control that they could have would be closing down at the low, so it's between the midpoint level and the low, so a decent amount, and significantly a close down below the important support at 13.29 that was support for the previous day's trading, and that is quite significant. The low of the market almost interacted with this 1309.1 level, previous important level, and we've seen some price rejection from that area. So even though the sellers have shown some decent commitment throughout the trading day, they did lose some commitment as the market was testing down around the 1309 level. Now, the size of this black body is quite significant. If you look back at the recent past, it's been some time since we saw a black body of that size, and that was roughly about 5th of July, so earlier this month. And it may suggest that we are seeing some selling coming back into this market. It denotes the sellers finding a substantial amount of net bearish, making a substantial amount of net bearish progress, and some solid downside momentum. But incredibly, this trend technically is still not changed. We have a lower low but an equal high. What we require for a change of trend is a lower high. Now, this does suggest a weakness of the buyers in the market, because the buyers now, as they were continuing to make higher highs and higher lows, they were unable to breach the high of the previous candle, and this does suggest that we may see the market trading to lower levels. So what we're looking for is confirmation of that. But it really is quite remarkable when we think that through all of this trading here, through this congestion area, and from the beginning of this first time frame uptrend that we saw around this period, technically the trend all the way through this period and the rally from 1200 has not changed. It's been up all through that period. Well, sorry, I mean from this period here, where we rallied from about the 1237 level, we did in fact have a change of trend back to the downside here, and the market testing down to roughly the 1200 level. But all through this area here, it really said something about the strength of the buyers in the market, and their ability to break out above the important 1300 level that had been tested quite frequently. Now, I suggest that if this market does continue to trade off, then the 1300 level should act as very, very solid support for this market. So it is an area that we do need to be aware of if the market does breach the 1309 level. Now, because this trend hasn't changed, this is actually a Japanese candlestick reversal pattern. It's what we call a tweezer's top, and that's where we have the two highs of these candles that are close to each other around the same level, and they're at exactly the same level, so that suggests a strong possibility for a change of trend. This is almost a bearish engulfing candle as well, where the black body of this current candle engulfs the previous black body, so another reason for a potential change of trend. But we always require, with any of the Japanese candlestick reversals, we always require confirmation of a change of trend, and that would be a candle with a lower high and lower low. And the way this current candle is developing, it's opened well down below the 1329 level, well down below the previous high, and is testing down roughly to the low. We have seen some buying coming in around that area, so obviously the influence of the 1309 level is coming into play. So we would want to see a candle with a lower high and lower low, and not too sure if we're going to get that. Remember, through all of this trend, the buyers have been very, very strong, and this may just be another candle where we have, for one day, some strength from the sellers, and then the buyers take over again. Now, the problem with this is obviously that we are now trading near the cloud, and if we do see a rally, we should see very, very solid resistance coming into this market, and it may change the dynamics in the market. But let's wait and see how the market develops over the next couple of trading days. Now, in terms of the Fibonacci extension, we're examining the relationship of this first time frame uptrend that the market's been in from the 1207 level, and the market has interacted with the 161.8% level for the past 2 consecutive days, and today we've seen rejection from there. That is suggesting that there is a good, strong possibility of a change of trend. So let's look for a potential lower high and lower low based on this very, very strong rejection from the 161.8% level. In terms of the Fibonacci retracement, it's not really telling us too much. The market is trading between the 161.8% and the 261.8%, but the 261.8% does give us a target if the market does rally. That's up at 1364, and it's coinciding almost roughly with the area around the bottom of the cloud, so that will be an important level over the next couple of days if the market does rally, and technically we are still in an uptrend, so there is potential for the market to trade up, but certainly with the weakness in this candle, the interaction with the previous Fibonacci technique, it does suggest the market may trade lower. Now in terms of the pattern, and here we saw some sort of a wedge type pattern, and our target was up around the 1309 or 1390 level. Now as we're trading today, that 1390 level is within the cloud. It's not a very strong likelihood that we will reach that target. There's a possibility of the market testing back down to these levels and perhaps finding support at this top barrier, and that happens quite often with the patterns. The barriers that they break out through can turn into an area of support or resistance, and in this case there is possibility of support if we extend that line, and that will coincide anyway with the highs around this level and around that 1300 round number, so there should be very strong support around that area. In terms of Ichimoku, obviously a bearish market in the long-term time frame, with the market trading down below the cloud, and we have been trading below there for quite some time, and the area around the bottom of the cloud should offer itself as very strong resistance, and that resistance will be moving down to meet the market over the next few days. So that's quite important, and that may be something that triggers a sell-off if the market does react and trade up to the cloud, and then we see the sellers coming in. In terms of the medium and fast term timeframes, the market is still bullish in those timeframes and trading above both the Kijun Sen and the Tenkan Sen, so a bullish market in that medium and fast term timeframes, but there is a possibility of the market trading down through the Tenkan Sen, so let's look for that. That's around the 1309 level, an important level moving forward tomorrow, but obviously strong support down below here around the 1300 level. That will be very important for the market for tomorrow. A trade up through 1329 and then through the 1350 level are crucial if the market is going to trade higher, but we do have the resistance from the cloud, so a very indecisive market at the moment, bounded by potentially strong resistance overhead, but potentially very strong support down below.